Welcome to the deep dive. Today we're looking into UK real estate stocks. Definitely a contrarian area right now. Our mission really is to explore if this feeling of, well, maximum pessimism actually signals a major investment opportunity for you.
Yeah, because the paradox we found in the sources is just striking. This long-held idea that UK property only goes up, it seems completely shattered. And yet at the same time, you've got really sophisticated global money actively moving into the market. We need to unpack that disconnect.
Okay, let's start with the mood, the sentiment on the ground.
Hmm.
It's pretty dire. I mean, you even have TV figures like Kirsty Allsop saying, and this is a direct quote, "The property market is dead."
Hmm.
She puts it down to market paralysis.
That quote really captures it. But what's the actual financial reason behind this paralysis, especially for homeowners? Well, it's basically the delayed hit from higher interest rates. Think about it. Millions of households locked in super cheap mortgages, maybe below 2%, right? Now they're coming up for refinancing and suddenly they're facing rates, well, north of 4%. That's a huge jump. Plus, you've got rising taxes, the new renters' rights bill adding pressure. It feels a bit like a slow motion car crash for that segment.
And it's not just houses, right? This gloom stretches to the commercial side too.
Oh, absolutely. The CEO of British Land, Simon Carter, he's been warning that government policy is hurting investor confidence across the board. The whole mood is just quite negative.
Okay, hang on. If British Land's own CEO is sounding bearish, why are these big global players making huge bets now? If the locals think it's dead, who's actually buying?
Right. Well, one person's doom is another's opportunity, isn't it? On the residential side, a lot of the buying is external. We're seeing reports, for example, of wealthy UAE residents picking up prime London properties. They see it as getting in at decade-low prices, essentially. They perceive value.
Interesting. And then commercially, it's not just finding value, it's an actual boom. The City of London office market is apparently thriving.
Thriving is the word. It's being fueled by a big influx of U.S. tech and finance firms. The Wall Street Journal covered this. The examples are pretty wild, actually. You hear Larry Fink at BlackRock is literally running out of desks. Ken Griffin's fund, Citadel, signed this enormous lease years early, paying top whack for premium space to get workers back in.
BlackRock can't find desks while others say the market's dead.
Yeah.
That level of difference is exactly why we do these deep dives. So this activity suggests London's still a major hub despite all the fears after Brexit. That's a powerful counter-narrative.
It is, and what's really fascinating is how disconnected this seems from the listed property stocks. Despite all this leasing activity, the big UK REITs, British Land, Land Securities, Derwent London, the companies that actually own these prime buildings, they look fundamentally cheap. Their stock charts show like a decade of going nowhere, a real malaise.
Right. So the physical assets are in demand, but the stocks owning them are lagging.
Yeah.
What could possibly break that logjam? What catalyst could get these stocks re-rated to reflect the actual property values rather than just pessimism?
We see maybe two main potential catalysts. First, some kind of policy stability. Just removing the uncertainty around taxes and renters' rights could really shift sentiment, or perhaps a bigger political change. Betting markets, and we're just reporting this impartially, are even pricing Nigel Farage as a potential next PM. A different direction could change things. Second, and this is key historically for property, is falling interest rates. Now, it's not the consensus view, but we are hearing some takes that UK government bonds gilts might actually be a generational buying opportunity. If that plays out, it implies lower rates ahead, which would be a huge boost.
Okay, let's tie this together for you listening. You've got this backdrop of intense pessimism. You've got listed stocks looking fundamentally cheap. But at the same time, big international money is making serious bets on the physical assets. And overall, Britain looks like one of the more attractively valued stock markets globally right now.
Which leaves you with a really provocative question to think about. London has proven pretty resilient as a global business center, right? So how long can this huge gap really last? The gap between, say, Apple and Citadel signing massive leases and the low valuations of the companies that own those buildings. That tension, that disconnect, well, that's the potential trade.